Howdy, y'all. Welcome to Liberty Call. Today is Tuesday, December 12th, 2023. Hope everybody's having a good day out there. It is a overcast and cool day here in Colorado. And when I say cool, I mean, what's the temperature right now? 35 degrees. So it is a balmy day by Colorado standards. So, anyways, hope you're having a good day out there. The markets seem to be in a good mood. We have the day one of the Fed meeting going on right now. So everyone's on pins and needles. Oh my God, are they going to lower rates? Please, please, please lower rates so my growth stocks will go up. I imagine that's what most people are saying. Oh gosh, my beard's all messy. Anyways, if it is your first time watching Liberty Call, if you could do me a favor, yes, you in the pink shirt right there. Yeah, John, I see you right there. Give me some thumbs up, likes, shares, subscribes, follows. Press the notification bell because you want to know when I go live. Because again, minimum 2 days out of the week, I say something smart. Minimum, sometimes 3. But I can't. Not all 5. I don't get paid enough to do this free broadcast to do smart things every day of the week. All right, well, let's go ahead and get into today's numbers. The Dow Jones was up 0.48%, 173 points, closed at 36,577. S&P 500 up 0.45%, closed at 46.43. NASDAQ up 0.7%, closed at 14,533. The VIX fell 4.43% today. It's at 1207. Canada down 0.42, Brazil down 0.45, and Mexico up 0.08. In Europe, looks like Germany was pretty flat, down 0.02. UK down 0.03. France down 0.11. The Netherlands down 0.04. Spain down 0.78%. Italy down 0.28%. Switzerland up 0.19%. And Portugal down 1.23%. Russian exchanges split today. MOEX down 0.21%. RTSI up 0.77%. And the Asian markets, the Nikkei in Japan was up 0.1% last night. Australia up 0.5%. New Zealand up 0.12%. In China, the Shanghai was up 0.4%. The Shenzhen Component down 0.08%. China A50 up 0.38%. DJ Shanghai up 0.33%. Hang Seng up 1.33%. And the Taiwan weighted up 0.19% for the day. So again, not that the rest of the world, hangs on. Well, maybe they do wait to see what our Federal Reserve is going to do as far as messing things up globally. But anyway, so yeah, today is the last meeting for this year, and I'll tear that off later. So let's see, they've done 1, 2, 3. They did 4. So they did rate hikes at the January, March, and May meetings. No change in June. They raised it 0.25% in July, and then no change in September, October, and we'll see what happens tomorrow when they make their announcement. I don't think they're going to do anything, being that the Fed doesn't really like rocking the boat too much, and that they haven't gotten a ton of pressure yet from, Wall Street and big business to, start cranking that, the rate down and, start up the money printers again. With more quantitative easing, because that's worked out so well over the last couple of decades. I mean, yes, we didn't really feel a lot of the shock after the 08, 09 downturn with the housing crash, but there was still a lot of inflation there. We just didn't really feel it at the time, and keeping rates at zero until about 2016, things felt all right, but we built up a lot of inflation in the system. So is the inflation, I've said this before, is the inflation we're feeling today the inflation from the 6 trillion in money printing from COVID? Or is it the built up inflation from a decade of at or near zero interest rates from, say 2009 till, 2016, 17 timeframe? And even then it only got up to about 2.5% at the end of 2019. And they started cranking it back down because we had the reverse repo markets were a mess. And anyways, you don't care about that stuff. All right, let's go ahead and get into today's market recap. Stocks rise as slowdown inflation continues in November. Fed meeting kicks off. All right, get my notes here. All right, U.S. stocks rose on Tuesday as data indicating a continued slowdown in inflation fueled hopes for an early rate cut next year, coinciding with the beginning of the Federal Reserve's 2-day meeting. Annual headline consumer price growth eased to 3.1% in the latest data. That's still 1.1% higher than the 2% that they'd like. So that's a little over 50% more than what they would prefer. Annual headline. Okay, we already talked about that. Down from 3.2% in October. The closely watched core figure, excluding volatile items like food and energy, remained at 4% annually. The figures in line with expectations sustained bets on a rate cut in the first half of the year, with approximately 50% of traders expecting a cut in May. Like I said, I think they'll probably cut rates just because the Fed is spineless. If the economy is where I think it will probably be, in 6 months from now, unemployment will probably be climbing, and we'll be in kind of a malaise. And if it gets really bad, then of course the Fed's just going to crank that printer. Who needs dollars? Here we are. So, all right, let's get back to the recap here. Treasury yields retreated, with the 10-year Treasury yield down 2 basis points. 2 basis points to 4.31%. Oracle faced a more than 12% decline after reporting quarterly revenue that fell short of expectations due to sluggish cloud growth. Hasbro slipped over 1% following its announcement of workforce cuts amounting to around 20% amid ongoing pressure from declining toy sales. I saw that headline on the news earlier today. The Federal Reserve initiated its 2-day meeting, anticipated to result in an unchanged interest rate decision. Investor focus was on the Fed's projections, particularly the dot plots, with expectations for an increased number of cuts next year. However, some analysts expressed skepticism, noting market expectations of around 100 to 125 basis points of cuts by the end of next year, predicting potential disappointment from the Federal Reserve. In other news, a federal jury ruled against Google in an antitrust suit brought by Epic Games, the maker of Fortnite. The lawsuit accused Google of using its Play App Store as an illegal monopoly, charging high fees on developers and stifling competition in the Android app market. Google plans to appeal the ruling, and decisions on required changes are expected in January. Energy stocks declined over 1% as oil prices fell due to concerns about excess supply, despite an attack on a chemical tanker by Iran-aligned Houthis. Occidental Petroleum, Marathon Oil, and Devon Energy were among the notable decliners in the sector. So, like I said, I mean, it's the talk about the dot plots, and I was here on Fox Business earlier today. They had the dot plots up during Charles's show, and I mean, I think it was 2025. I mean, the dot plots were still, kind of in the middle range, but we covered this yesterday in the article, the last one by Brian Westbury, and in his opinion, and I pretty much agree with him, is that we are at kind of a neutral rate right now. I mean, interest rates, for those of us older than, say 40, we remember interest rates in the 5, 6, 7% as kind of a that normal floating rate, depending upon the what's going on in the economy, and that's how rates should really be set, based upon the bank's appetite for risk, and what's the prevailing rates among competitors. And if, say, the prevailing rate is, we'll just say 5%, and someone comes in and you really want their the bank really wants their business, and they have excellent credit, they have really good collateral, and you say, all right, well, I'd really like to make some money off your loan, so I'll give you 4 3/4, even though the going rate is 5%. And that's how markets and rates are set, is by competition, and by also evaluating the risk profile of the person or the entity that you're lending money to. But anyway, people think the Fed has some sort of like magic gauge. They're like, just turn this dial and everything will be all right. All right, let's get to our next article here. U.S. inflation slows to 3.1% in November. Everyone's jumping up and down about that. All right. In November, the U.S. inflation rate slowed slightly, aligning with expectations and providing insights into the Federal Reserve's stance on interest rates in the coming year. The annual headline consumer price growth eased to 3.1%, down from October's 3.2%. The monthly reading increased by 0.1%, with rising shelter costs offsetting declining gas prices. The closely watched core figure, excluding volatile elements like food and energy, maintained a 4% annual increase, consistent with the prior month. On a monthly basis, underlying price gains accelerated to 0.3%, slightly faster than October's 0.2%. This data sheds light on the impact of the Federal Reserve's prolonged interest rate hikes on price growth in the U.S. Prolonged, I mean, seriously. In the U.S., while market observers anticipate a potential reduction in borrowing costs early next year, I wouldn't consider May early. It's kind of mid-year. Fed Chair Jerome Powell emphasizes a cautious approach, waiting for clear evidence of subdued inflation. On Wednesday, the Federal Reserve is expected to reveal its latest monetary policy decision, with interest rates likely to remain between 5.25% and 5.5%. Attention will focus on Powell's statements and the quarterly dot plot indicating policymakers' rate forecasts. Kathy Jones, chief fixed income strategist at Charles Schwab, noted that the report is unlikely to alter the Fed's view, emphasizing the need to wait before discussing rate cuts. Despite positive economic trends, the Fed remains cautious about making any immediate moves. Expectations for an early rate cut in March are diminishing, and markets are now projecting a 50% chance of a rate reduction in May. Strong employment data from the previous week supports the notion of a resilient labor market, potentially applying upward pressure on wages and inflation. This could extend the period during which the Fed maintains current interest rates. Yeah, I think a lot of people are going to be disappointed that rates are not getting slashed. Again, this is normal. This I understand for the millennials who graduated high school and 10, 15 years ago that they've grown up in a world where 0% everything, cars, credit cards, mortgages at 3%. I mean, it's just not realistic. All right. One last article here from our buddies over at Zero Hedge. It's titled, Politicians and Regulators Keep Shouting That Crypto is Synonymous with Fraud. Here's Why They're Wrong. And this was written by Omid Melakin and Brian Whitehurst via Fortune.com. Let's see what they had to say. All right. The cryptocurrency industry is frequently criticized for being rife with fraud, manipulation, and money laundering. But this characterization oversimplifies a complex global ecosystem. And if I could pause here, I would imagine that the US dollar is used for far more money laundering, drug cartels, gun running and things like, have you ever seen Narcos? Big pallets of cash. We all know the CIA is really behind the drug trade in America and the people trade as far as, getting people across the border. Our government is as crooked as, they're basically just gangsters with badges. So, all right, well, let's get back into it. While high-profile scandals such as those involving FTX and Terra Luna have contributed to negative perceptions, the majority of cryptocurrency activity is legitimate. Bitcoin, operating for over a decade without harming users, stands as a decentralized payment system without any recorded instances of fraud. When fraud occurs in the crypto space, it is often perpetuated by financial intermediaries, FTX, as seen in the FTX case, rather than inherent issues with the cryptocurrencies themselves. Bitcoin, Ether represent 2/3 of the digital asset value, and neither has been implicated in fraudulent activities. Despite occasional fraudulent tokens issued on Ethereum, the major crypto transactions have been legitimate. The author argues that even cases like Binance, which face accusations of illegal actions, are not unique to crypto and could occur with traditional intermediaries. Critics of cryptocurrency often fail to acknowledge the positive uses within the industry and tend to view setbacks as reasons to condemn the entire sector. The author advocates for authorities to focus on pursuing scams while recognizing the legitimate aspects of the cryptocurrency industry, the potential for positive contributions to the financial landscape, and the building of trust through this new approach deserve consideration and amid the prevailing skepticism. So, like I said, the fraud is pretty much with the places where you park your coins or your crypto, and people use that, they stake it and use it for basically to leverage elsewhere. So that's where the people get into real problems. If someone's just acting as a vault for you, there's really no, at least from my view, I really don't see any issues with that. But anyways, that's that's what. Let me see if there's anything else I wanted to talk about before we. Legitimate. Yeah, that's pretty much it. Like I said, it is a little more confusing for people who aren't up with how it works. But all in all, I find it. And again, our government, and I think the reason. Oh, and that's what I wanted to get to. The reason that those in government don't like it is that they can't control and manipulate the currency. I mean, think about 3 years ago when they printed all that money. All they had to do was just move the decimal point around, and boom, you got more cash. Well, all they did was devalue the dollars and cents that you had sitting in your bank account, in your brokerage, things like that. Screws up the valuation of your equities and your in your investment portfolio, because everything has to get repriced. So to me, that's the reason they can. I mean, because right now government really they're trying to push everyone towards a digital dollar. And the reason in my own opinion, is that they would want to do that so that if you're a bad citizen, they can just turn off your money, or whatever they want to do with it. So I think that's the big reason why they dislike crypto so much, is that they don't have control over you. And if they don't have control over the people, that's where they really seem to get bent out of shape. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. Hope you have a wonderful evening, and I shall talk to you next time. Adios.